Welcome back, home loan shoppers. Good to see you again. Welcome to Chapter 5, Section 4 in this home loan shopping course. This is the last section in Chapter 5, and as you can see, this section is going to be on getting the loan estimate. And of course, if you just happen to stumble across this video, this is one video in a series of videos that comprise a complete home loan shopping course. If you'd like to join us, which I hope you do, go ahead and dip into the description of this video. You will see the course outline and it is hyperlinked, so you can join us in any part of the course that you would like to. All right, so let's get into this last section in Chapter 5, getting the loan estimates. As a quick refresher, remember in the last section, what we did is we got what I call the base loan estimate, or your initial loan estimate. We got that loan estimate from one of the 3 or maybe 2 lenders that you selected to shop at. So out of the 3 lenders, let's say you decided to shop at 3 of them. And out of those 3 lenders, you chose one of them that you liked the best. You know, the person was easy to deal with. They sounded really cool. They sounded real knowledgeable, etc. Like I mentioned in the last section. So that was the one that you called them back up. Because remember, you called them previously in the other chapter just to do a little recon. All right, to get some information only. Now you're calling them back, that same loan originator that you spoke with, you called them back in the previous section to get your initial loan estimate, or what I call the base loan estimate. All right, and so all you had to do to get that loan estimate from them was to submit an application. And during the process of submitting your application, they pulled your credit up, and that only took about 35-40 minutes. Then that loan originator emailed you out a link. Most likely they did it like this. They emailed you a link, and that link was to their portal, and you were able to log into their portal and download your disclosures. Those disclosures included the loan estimate, or they could have just emailed you the disclosures directly. Usually there is a portal involved. So you went into that portal and you got the loan estimate. So now there's 2 things we're going to do in this section. One, and it's so easy. I'm going to show you how to read that loan estimate that you have in your hand now, or actually it's going to be on your computer. If you went someplace in person, like your credit union or a bank, and they did the application right there on the spot, they're required to give you disclosures right there. But in addition to giving you disclosures, they might have also emailed them to you. So however way you get them, you've got that loan estimate in your hands right now, and I'm going to teach you the really easy and effective way to read that loan estimate. Because what you're going to do, let me again finish this little preview here. So what you're going to do with that loan estimate, like I mentioned in the last section, you're going to take that loan estimate and contact the other 2 companies that you chose to shop at. And you're going to tell those companies, hey, I've got a loan estimate, let's say 5.99, for example. I've got a loan estimate for 5.99 from ABC company. You know, I liked working with you. I wanted to know if you guys can beat this loan estimate. If you can beat it, you know, by a good amount, I'll roll with you guys. So you send them over the loan estimate. Like I mentioned, there's no private or sensitive information on that loan estimate. You can disclose it to them. You don't want to keep it secret. Some people think that they're going to get a better deal if they don't show it to them, if they don't tell them what they have. No. You want to show them the loan estimate. The only thing on there is your name and the address. There's no email address. There's no phone numbers, no contact information, no social security number, nothing like that on the loan estimate. So you give that to them. They say they can beat it or they can't beat it. If they say they can beat it, then you're going to have to put in an application with them so they too can give you the loan estimate as proof that they can actually beat it. Now, let's say you reach out to the third one also, and that third one looks at the loan estimate and just flat out tells you, nah, we can't beat that. And that actually does happen. It's a 50-50 chance whether they can beat it or not. They're going to tell you right on the spot whether they can beat it or not. That's the whole purpose of it. All right. So now let's say the other company, the second company said that they can beat it. You put in an application with them. They gave you the loan estimate. Now you're going to put those loan estimates side by side and verify who has the lower fees. And I'm going to mention in the summary section, but I'll tell you this right now, just a little tip. So let's just say the second one does in fact have better pricing. They gave that 5.99 for cheaper fees than the first one. Let's say the first company that you got the base loan estimate from, let's say that they gave you 5.99 and the total fees came up to $4,000. And then the second company came in with that 5.99 and the total fees were $3,000. So you're thinking about, you're just going to go ahead and go forward with the second company just based on a pricing perspective. Well, you could do one more thing. You could take that loan estimate and go back to the initial one that you called, the company that you called to get your initial loan estimate, and you could tell them, hey, I was out there just checking out things, and they know you're checking out things, and you should let them know, hey, I am shopping in this process. I always appreciate when people tell me that I know they're doing it. Even the ones that say they're not doing it, I know they're doing it. No big deal. So you can go ahead and tell them. A lot of times, not a lot of times, almost all the time, they appreciate that and they actually work harder for you. So don't be afraid to tell them that you're shopping. I always appreciated that, and everyone I worked with always appreciated that. So you go back to the first person, the person that gave you the first loan estimate, and tell them, hey, you know what? They said they sent me a loan estimate for 5.99 with $3,000 in costs, which is $1,000 cheaper than the one you gave me. So that first person very well might be able to do it. They might have to go to their manager or something and say, hey, they got a loan estimate from XYZ lending, and it actually is. They sent me a copy of the loan estimate, and it's $1,000 cheaper. And they very well, if that company can beat it, chances are they can do it also. So they may come back with a revised loan estimate that either matches or beats it. Now, this is the situation where if the original company that you liked, remember, they were the ones you got the base loan estimate from. They were the cool one. They were the most transparent. They didn't pressure you into doing an application. Very knowledgeable. If they can match it, even though they don't beat it, if they can match the loan estimate from the new place, I would roll with them. I wouldn't require them. They're the first ones you dealt with. They were the coolest ones. They gave you the loan estimate promptly. And then, you had to do your diligence. You had to check out at least one more company. And so you checked out another company. They gave you a loan estimate for lower. You went back. So chances are that first company would be able to at least match what the new one got for you. So that's a way where, you go with the first one and they match that pricing, and then you can move forward. And that's how you work the loan estimate business. That's the kind of the mechanics behind it. You can probably sort of figure that out, but I just wanted to kind of spell it out for you. You get your initial loan estimate from the first one, use that to shop at the other ones. You say you sent it to one company, they said, no, we can't beat it. You moved on to the other one. That company said, yeah, it looks like we can beat it. So you put in an application. They did your application, pulled up your credit, and sent you a loan estimate. Turns out this other company, their loan estimate is $1,000 cheaper than the first one. So you went back to the first company and told them, hey, just doing my diligence here. The other company sent me a loan estimate for $1,000 cheaper than yours. Can you guys at least match that or even beat it? So the loan originator went to their manager, pricing desk, whoever they go to. Turns out they can beat it. They sent you a revised estimate for 5.99 with the $3,000, which matches the new company. So you're going to go ahead and go with the first cool company that you called. Bing, 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 bing. All right, let's move on and get into reading the loan estimate. And this is going to be really easy. All right, check it out. All right, so here we are here. This is from the Consumer Financial Protection Bureau's website, this sample loan estimate. So I'm going to take you through in pro version twice, and then I'll do it in slow-mo version. All right, here we go, pro version. You come over here to this section right here. You make sure these terms match what you want, that in fact you do want a 30-year fixed loan. You are doing a purchase. The interest rate is fixed, and it is a conventional loan. Bam. Now you go down to this rate lock section. You make sure the rate is locked or not locked. Then you come down to the interest rate. You make sure it is the right interest rate. In this case, you see here this 3.875. Then you roll down to this section here where the taxes and insurance are. You make sure if you wanted taxes and insurance included, taxes and insurance are included. And if you did not want them included, they are not included. Now, you at the bottom of the page, we're not going to look at this stuff. We're just going to go to page 2. Bam. All right, so on page 2, you're going to look over here at the loan cost section. You see section A, these are the lender's fees. That's the subtotal, 1802. Then you see section B, that's the subtotal of these third-party fees, 672. Then you go to this C, this is a subtotal of the other third-party fees, 3198. And here we go, A plus B plus C equals here on line D. These are the total cost of the loan right here, the total loan cost, 5,672. Then you look over on the right side of the page in this section called lender's credits. They don't have any lender's credits here, so this total would be 5,672. Those are the total fees on this loan estimate. I think we did that in 30 seconds or something like that, whatever, less than a minute. Now, if there were lender credits here, let's say there were $1,000 in lender credits, you take that $1,000, subtract it from here, and the total would be 4,672, and that would be the total cost of this loan. All right, let's do that one more again. All right, again, the loan estimate is three pages, although you might get some loan estimates with a couple extra additional pages on there, 5, but the core loan estimate is 3 pages long. So here we go. Back we're on page 1, right at the top of page 1 here. So you see, check out the terms again, that this is the right term, 30 years. This is the right type. It's a purchase loan. It's a fixed rate, adjustable rate, whatever. Make sure this is a fixed rate. Make sure if you're getting a conventional loan, this has conventional. Make sure the rate is either locked or unlocked. I'll explain that in a moment. Make sure the interest rate is the interest rate that you want. Come on down to the taxes and insurance. You see here, this will let you know if these boxes are checked right here and it has yes, that means taxes and insurance are included in the payment. You're going to have an escrow account for that. If you don't want that, make sure that it shows no here and those are not checked. Then we're going to flip over to page 2. On page 2, on the left side of the page, you see the loan cost here. Section A, these are all the lender's fees, 1802. Section B, these are some third-party fees. That's a subtotal, 672. Section C, these are more third-party fees, 3198. That's a total on there, 5,672. Look over here, see if there's any lender credits here. There's no lender credits, so that would be the total, 5,672. And like I gave in the last example a minute ago, let's say there's $1,000 in lender credits. You take that $1,000, subtract it from this 5,672. So your total fees would be 4,672. And right there, that is the boss quick way, accurately, easily to read a loan estimate. That was it. All right, home loan shoppers, let me show you some of the detail that I glossed over when I was doing the boss method of reading the loan estimate. All right, so let's go ahead and just jump right into it so we don't make this too long. So up here, I skipped over this, your name and address. You're going to notice this when you first pull this out, so you can take a glance at this. This is just going to have your name, address, and the property address if you're making a purchase. No big deal there, but you can take a quick glance at that if you want to. All right, coming over here, the reason why I told you about making sure the terms here, we covered that twice, and then I talked about the rate lock here. The reason why you want to check the rate lock is because you want to compare loan estimates that have the same rate lock. If the loan estimate is not locked in, then you want to compare it to the other loan estimate that is not locked in. And if the loan estimate is locked in, you want to compare it to a loan estimate that is locked in. The reason why is because the pricing is going to be cheaper when the loan estimate is not locked in. Or in other words, the company can offer lower pricing when the loan estimate is not locked in. So and put it a third way, the closing fees for this 3.875 will be lower on the loan estimate that is not locked in. So you want to compare apples to apples. 99.99999% of the time, when you're just shopping and you're not ready to commit to going with that lender or that whatever company it is, and you get a loan estimate, it's not going to be locked in, and it doesn't have to be locked in until you're ready to roll forward. Okay. Next down here, the interest rate. You want to make sure the interest rate is what you wanted and it is the same on all of the loan estimates that you're shopping around. You don't want to compare, like say you have this loan estimate for 3.875. You don't want to compare that 3.875 to another loan estimate at 4.125 or another loan estimate at 3.625. Don't let them fool you like that. I've seen that sometimes, like you got 3.875 from one, they sent you one from 3.625. Oh, the rate is lower, right? Well, but the closing costs are higher. And what did I mention in chapter 1? Right in chapter 1, I covered how we all have the same interest rates. That is so damn true, no matter what anybody tells you about that. If somebody tells you any different, they don't know what the hell they're talking about. We literally all have access to the same interest rates. The difference is what we charge in closing costs. My 3.875 is going to cost different from Quicken's 3.875 and Loan Depot's, etc., etc. You are shopping for the fees. So you get one or two loan estimates, other loan estimates at the same, in this case, 3.875, and you compare the fees. Who has the 3.875 rate with the lower fees? Ding, 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 ding. All right, let's move on. Now, I skipped by stuff like prepayment penalty and balloon payment penalty because those are things that you just are not going to see hardly in existence. Those, for the most part, are extinct, only on some non-QM loans, things like, anyway, I'm not even going to bother talking about those. We'll skip over that. Now, the reason why I told you go down to this taxes and insurance section is here's another thing. When taxes and insurance are not included at a lot of places, the pricing is cheaper. Again, in other words, the 3.875 rate will be a tiny bit cheaper when you're looking at a loan estimate that has taxes and insurance included at a lot of companies. And the same goes the other way around. If taxes and insurance are not included, the pricing for this 3.875 rate will be a tiny bit higher at a lot of places. So compare apples to apples. If you get one loan estimate with taxes and insurance included, get another loan estimate with taxes and insurance included. Now, coming down here to page 1, again, remember, this is the same sample loan estimate we're using from the Consumer Financial Protection Bureau, so these are the same figures. This right here, this is a summary of what's on page 2, and it's damn confusing. That's why I just like to pop over to page 2 instead of looking at this confusing ass summary, because this summary includes the loan fees. Do you remember what we looked at just a few minutes ago? They were $5,672 because there was no lender credits in there. And then you have these other loan costs right here, which we're going to talk about. And then this figure down here, this includes those, plus it can include monies for down payment, etc. So you want to just go to page 2 and check out that. Let's go to page 2 here. All right, so on page 2, you separate this left side of the page. Look what they have it titled as loan costs. Now, they did a piss poor job. When I see the people that created this form, they did a lot of wonderful things about it. This is one of the things they screwed up on, making these two similar. You have loan costs and other costs. Well, how the hell is somebody going to figure that out unless they have somebody like me coaching them on how this is set up? Loan costs means these are all cost associated with the loan, all the closing costs. Over here, these other costs, these are not loan fees, but these are costs that you are going to have to pay that are associated with doing a loan like this. Costs like these government fees here for taxes and transfer taxes and recording fees. The lender doesn't determine this. No broker determines this. No bank determines this. These are government fees here. These are going to be the same no matter what company you go with. That's why I ignored these. I ignored everything on the right side of the page except for one item. And then you've got these prepaid items. These are going to be the same no matter what company you go to. The insurance, this is going to be the insurance if you're doing a purchase or if you have insurance due on a refinance, or the prepaid interest, which is your first month's payment. Property tax prepaid's going to be the same no matter what company you go to. They might calculate them differently in the beginning. In the end, they're going to be the same. Same thing here. This is the money that's going to go into your escrow account. They're going to calculate it differently in the beginning. In the end, it's going to be the same. Optional owner's title insurance policy. If you're doing a purchase, actually you could purchase it during a refinance also. Again, that's optional and it's going to be the same. It has nothing to do with the lender. That's with the title company if you choose to get optional title insurance policy. The only thing on this right side of the page that has anything to do with the loan costs are the lender credits here that I mentioned when I did the first run through. Why on the freaking planet Earth did these ding-dongs, that these people who created this form, these nice, wonderful, smart people, put the lender credits over here and not freaking over here on the left side of the page in section A where they should be? unfreaking believable. So this is the only thing that I have you looking to the right side of the page for. That's why I told you look at the total loan cost down here and then subtract any lender credits that are showing over here on the right side of the page where they shouldn't be. So that was some of the detail on the second page. Remember, left side of the page, these are the loan costs. The closing costs actually are loan fees, if you will. Over here, these are other things that you pay associated with doing a loan that are not attributed to the lender except for these freaking lender credits here. I have a sore spot about that. Yes. All right, let's just check out page 3 because I didn't cover page 3. Why? Not really helpful information here. I already told you about the APR and where it is most powerfully used for, which is in advertising. That's where, or comparing two rates when you're determining should you pay points or not to get a lower rate. If you forgot about that or just ran across this, go back to that section where I covered the APR. You'll see that in the lesson outline. And this right here, this is another freaking useless item. Sorry, I just hate that they did this. This used to show the total interest and everything loan that you're paying back. The total amount, the interest plus the loan, it showed everything that you're going to eventually pay back. It was that big, scary number that was 2.5 to 3 times what you originally borrowed. I love showing people that. I love scaring the shit out of them with that because I wanted to drive the point home that you need to do 2 things if you want to save a freaking lot of money here. A, make extra payments when you can. If you're serious about keeping this home, you're going to stay in here. Make those extra payments, drive that principal down, which will drive that interest down, and keep your interest rate as low as possible. Those 2 things, the extra payments and interest. And that's what I used to be able to drive home when I'd show them that big figure on this page here. And now we got this rinky dinky funky ass little total interest rate paid thing, which really doesn't help with scaring people into saving money. I have to scare people into saving money sometimes. All right. So this concludes section 4 in chapter 5, and we're going to go into chapter 6 where I'm going to put it all together for you. And so if it doesn't quite make sense now, when I put all the ingredients in a pot in chapter 6, let it simmer down and give you a taste of it. It'll all be wonderful. All right. So thank you again for tuning in. The next video should automatically start up because this is part of the playlist. If it does not, please reference the course outlined in the description of this video and click on the next hyperlink section. OK, so take care, and I will see you very soon on the next video in the next chapter.